There's a saying in our business that people buy with their eyes, that our first response is visual and everything else is secondary, that you can't sell what you can't see, that what we see shapes our perception of what we believe. That's why in the court of law, we demand physical evidence. We need to see it to believe it. We also believe that people can fall in love with a brand, just like they can a person or a passion. And it's not always rational, nor is their behavior. People camping out for days in line to be the first to buy a new phone when they could have easily ordered one online is not rational, but they do it. It's a customer saying, "I believe what you believe." They too see themselves as the crazy ones, the misfits, the rebels, the round pegs in the square holes, the ones who see things differently. Because they too believe that the ones who are crazy enough to think they can change the world are the ones who do. That's why they stand in line for days. It's about much more than a product. We believe to love what you do, you have to do what you love. It has to be a reflection of what you truly believe in, those things you live for, fight for, and die for. It has to come from the heart. It has to move beyond a physical and intellectual connection to an emotional one. Why is that important? Because the heart is said to be 10,000 times more powerful than the mind. You can't give yourself goosebumps because it needs to come from the heart. We need to connect to something we deeply believe in to become emotional, to get goosebumps, butterflies, or tears. It has to be authentic. Why am I on a conference call with investors and analysts talking about love and buying with our eyes? I'm talking about these things because we believe RH is in the early stages of becoming a brand worthy of loving. We believe what we are doing is moving beyond an intellectual connection to an emotional one. We are beginning to express those things we deeply believe in a way you can see it. It's becoming tangible. There's physical evidence, and we have given ourselves and others goosebumps. Let me share some of the evidence with you. For that, I will point you to Los Angeles and Atlanta. I'm not sure how many of you have been to the newest physical expressions of our brand, RH West Hollywood, the gallery on Melrose Avenue, or RH Atlanta, the gallery at the estate in Buckhead. But if you haven't, you need to, because those two galleries will give you a glimpse into our future. They demonstrate the power of our imagination and the passion and persistence it takes to bring dreams to life. I told our team in a letter after the opening of Melrose that it was not what we've done that I'm most proud of. It's who we become. We become a team of people who don't know what can't be done. A team of people who believe in leadership versus followship, who are not interested in best practices, but are passionate about next practices. We become a team of people that are driven by our values and beliefs, those things we live for, would fight for, and die for. We didn't open stores. We created never-seen-before experiences. We've created spaces that blur the lines between residential and retail, indoors and outdoors, physical and digital. We've created spaces where guests who visit our new homes are saying, "I want to live here." I've been in retail almost 40 years, and I've never heard anyone say they wanted to live in a retail store until now. Most retail stores are archaic windowless boxes that lack any sense of humanity. There's no fresh air or natural light. Plants die in a typical retail store. And if we were building those, I too would be worried about the threat of online. But we don't build retail stores. We are creating inspiring spaces with garden courtyards and rooftop parks, with reflecting pools, trickling fountains, and fireplaces. Spaces that are a reflection of human design, that are studies of balance, symmetry, and the golden mean. Spaces that would make Marcus Vitruvius, one of the authors of the original 10 books of architecture, and Leonardo da Vinci, who made Vitruvius's The Vitruvian Man, the most famous study of design in history, proud. Spaces that create a feeling of harmony. Spaces where everything is intentional and nothing is accidental. Where everything has been architected and integrated. The assortment logic, the presentation logic, the financial logic. Spaces that inspire and render its contents more valuable. You don't see a cash register or signs in the windows, nor on the products, because you wouldn't see them in a home. It looks and feels different because it is different. We believe we've created the most inspiring and productive spaces in the history of our industry. And it hasn't happened overnight. It's been years in the making, years of curating the people, the products, the ideas, and the inspiration then carefully integrating those to create an experience that reflects everything we believe in and stand for, our own unique and authentic point of view. I know some of you would like us to stop innovating and start duplicating so you can build a simple model. It's not going to happen. We refuse to follow in the footsteps of others. We refuse to be confined by conventional wisdom or be victims of other people's thinking. We are inspired every day to find a better way, to define our brand in a manner that will inspire our customers and redefine our industry. We opened our first design gallery on Beverly Boulevard in West Hollywood just over 3 years ago. It was one of the top performing locations in the company, and we closed it to create something better. We opened our first built from the ground up design gallery in Houston on November 11th, 2011, which was hailed by many as the most innovative and productive retail store of its kind. We have decided, with the support and financial participation of our landlord in Houston, to build an even better version of ourselves, 3 times the size, exactly 3 years later. This is not going to be a retail model you can fit into a simple spreadsheet. We are not going to keep doing the same thing over and over again because we would get bored and so would our guests. You can't build a simple model of true innovators like Apple, Tesla, Google, or Facebook, and you won't be able to build one for our age. Because we won't sit still. We will be forever unsatisfied and forever on the move. This is not a lifestyle, it is a love style, and it comes from our hearts. If you want to buy our stock or follow our company, then put down your spreadsheet and fly to Los Angeles and Atlanta. You have to see it to believe it. Then and only then, you should decide to buy with your eyes. If you want to know us, go and see us. You too might see what we see, believe what we believe, and also fall in love.
We at RH see a clear path to generating $4 to $5 billion in revenue with a mid-teen operating margin once our North American real estate transformation is complete and based on the continued expansion of our product offering. Let me tell you how we get there. We believe we have the world's largest collection of luxury home furnishings under one brand, trapped in undersized 7,000 square foot legacy stores. And the key to unlocking the value of our company is to transform our real estate. Our next generation galleries will present 6 to 8 times the product assortment of our legacy galleries, and we expect retail sales to increase 2 to 4 times in each market as we continue to expand our product offering into new categories and businesses. Additionally, we have seen a lift in our direct business in each market as we open these new galleries. The incremental square footage will allow us to fully monetize the dominant assortments we have built and also capitalize on the future category expansions and new categories we have in the pipeline. Today, many of our new businesses are essentially direct-only businesses. Our new galleries will enable us to showcase collections that have never been seen in our retail stores. Our baby and child collection is only displayed in 5 locations today. The only retail expression of RH Small Spaces just debuted in Atlanta 2 weeks ago. We have one of the most dominant collections of outdoor furniture in the world and only display 1 collection in our legacy stores. Our next generation design galleries will include Ben Soleimani rug showrooms, bath hardware shops, as well as linen and tableware pantries. Another important feature in these new galleries is a dedicated space for RH interior design services. We are building a world-class interior design team who can provide full schematic designs and renderings for every room in your home and also arrange for installation and setup. We believe the quality of presentation in our new galleries rivals that of the best interior designers in the world and positions us as a true design authority in the industry. We are extremely pleased with the early performance of our recently opened galleries in Los Angeles and Atlanta. And as Gary mentioned, you must experience these galleries to truly understand the opportunity that lies ahead. Our robust, multi-year product pipeline is as exciting as our real estate transformation and will provide further fuel for our long-term growth. We look forward to unveiling our latest category and product expansions in the near future. With 60 to 70 stores at the end of our North American transformation and our strong pipeline for new products, categories, and businesses, we see a clear path to our long-term revenue target of $4 to $5 billion. We also see a path toward industry-leading mid-teens operating margin potential in our long-term model. We expect to see 600 to 700 basis points of improvement in our operating margin from the approximately 9% implied in our full-year fiscal 2014 guidance. Where will this expansion come from? First, we expect to achieve occupancy leverage of approximately 200 basis points. The increased sales volume we expect in each market, coupled with the real estate deals we are getting, will provide tremendous leverage in our retail occupancy. We also expect leverage in our supply chain as we optimize our inventory investments over time and leverage our DC infrastructure. Second, we expect additional gross margin expansion of 100 basis points from merchandise margin expansion and shipping efficiencies. Over the last year, we have proven that we have significant pricing power. We believe this will improve further as we continue to take market share in this highly fragmented market. As our newer categories and products gain scale, we also expect improved vendor pricing. The efficiencies of insourcing our home delivery hubs and opportunities to optimize our shipping model give us further confidence in our ability to expand our gross margin. In addition, we expect to see advertising cost leverage of at least 200 basis points in our long-term model. The higher sales volumes achieved in our full-line design galleries provide significant leverage on our ad cost spend in each market. The retail expression and experience in these locations truly serves as the best form of advertising for our brand. We also see meaningful opportunity to further optimize our sourcebook strategy and enhance our online marketing initiatives. Finally, we see 100 to 200 basis points improvement in other G&A expenses. Our fixed corporate and other G&A expenses will leverage with the increased sales volumes generated from our retail transformation. We have a distinct advantage in this area, as the full leverage potential of the investments made to build our assortment and fixed cost infrastructure has not been fully realized. In total, this leads us to an operating margin of 15 to 16% once we've completed our North American real estate transformation. Based on recent results and continued improvements in our financial model, we also see a near-term path to becoming free cash flow positive and expect to reach this important goal within the next 12 to 24 months. It is important to note that our long-term targets do not take into account all of the additional growth opportunities that lie ahead beyond our North American real estate transformation. We believe there's tremendous opportunity for our brand to travel internationally and believe we could have a meaningful presence in the Middle East, Europe, South America, Australia, and throughout Asia, and are in early discussions with potential partners in some of these markets. Let me now talk about the second half and full year outlook. We are very pleased with our third quarter performance and posted results at the high end of our revenue range and exceeded our earnings outlook. Our 2014 source books are performing well, and our new product is resonating with customers. Our revenue accelerated as expected from 14% in Q2, and we delivered 22% top-line growth during the quarter on top of 39% last year. Comparable brand revenue accelerated from 13% in Q2 to 22% this quarter on top of 38% last year. We also delivered solid gross margin expansion of 160 basis points, driven by continued leverage on shipping and occupancy, as well as higher merchandise margins in our core business. We had higher ad costs in the quarter due to the significantly higher page counts of our 2014 source books, which offset the leverage we achieved in all other SG&A lines. We are very pleased with the 150 basis point expansion in our operating margins, ending the quarter at 7.6%. Our investments in inventory continue to pay off, with lower back orders and other benefits. Inventory during the quarter was up 36%, and we expect to end the year with inventories growing slightly ahead of our annual sales outlook. Our balance sheet is stronger than ever. As we announced last week, we expanded our revolving line of credit to $600 million, with lower borrowing rates and an accordion feature of up to $800 million. This, combined with the $350 million zero-coupon convertible debt we raised earlier this year, gives us the capital structure to execute on our real estate transformation and growth plans in any market environment. Turning to our outlook, based on our continued momentum and strong business trends, we are increasing our fiscal 2014 adjusted EPS guidance to a range of $2.33 to $2.35, and are on track to deliver our fifth consecutive year of net revenue growth in excess of 20%. For the fourth quarter, we anticipate revenue growth in the range of 22 to 24% and adjusted EPS growth in the range of 19 to 22%. As we look to 2015, we expect to open at least 4 new full-line design galleries, including Chicago, Denver, Tampa, and Austin, and expect these locations to open in the back half of the year, and that ending leased selling square footage will grow in the range of 30 to 35%. The pipeline for 2016 and beyond is building nicely. We currently have 4 leases signed for 2016 openings and are in negotiations or have identified sites for over 25 more locations for 2016 and beyond. We are excited about the future and the tremendous opportunity that lies ahead, and are focused on delivering on our long-term goals, including $4 to $5 billion in sales in North America, mid-teens operating margin, and significant free cash flow generation. We believe we have an extremely compelling plan over the near term and one of the most dynamic and transformational stories in all of retail. We want to thank all of our associates and partners for their hard work and commitment to RH. Thank you all for your continued interest, and we wish you and your families a very happy holiday.